Alex, what are you bringing us aside of that headline?
Well, it's very interesting because I think my colleagues that are joining me today on Editor's Cut will be doing something that they've never done in their careers. Despite the fact that they've been looking at auto for several years now, they haven't looked at an automotive IPO. Because the last one was 20 years back, Maruti Suzuki. So this is going to be an interesting DRHP to go through at the very least. But before we get into the conversation about what is on the table for the investor, I'm curious what my colleagues have to say about the pronunciation of this car company, because we've all been calling it Hyundai for years. Is it Hyundai?
It depends where you're from. It depends on where you're from.
If you're in South Korea?
If you're in South Korea, maybe you'll say Hyundai.
Yeah, there you go. So, all right, so maybe, just maybe, if we're going to be true to form, we're going to have to practice saying it right. But having said that, what's on offer for the investor? What's the size of the issue?
So, Alex, first of all, thank you for the great opening, so to speak, because yes, it's a landmark moment for the Indian car making space, first car maker. We do not know the size of the IPO so far, but speaking to sources, we came to know that it will rival LIC's from a few years ago. That was a 20,000 crore offering. It will be rivaling that. So essentially, or potentially, it can be the biggest in India's history. In terms of valuation, again, we are getting the sense that it will be about 20 to 30 billion dollars. Again, from sources, not something what the company is claiming, which will actually be half of what the parent is valued in South Korea.
Oh, that's very interesting.
Yeah.
All right, so that's essentially the numbers to watch out for. There is more to talk about, of course, on valuations, because ultimately, where is it being pegged? You have some multiples. Where is it at right now?
So over the weekend, we were having conversations with analysts, how they are seeing the IPO, what are their calculations about how do we arrive at a valuation for such a big company. So what they're saying is, say, for example, if Maruti Suzuki is at 25 times its FY27 P multiples, Hyundai will be around 21 to 22 times FY27 earnings. And at a lower level, it's Mahindra at 16 times. That's the sense we are getting from analysts.
Puneet, you've done some back-of-the-envelope calculations as well. What do those numbers stack up as?
Yeah, essentially just looking at, because we look at Hyundai has a high EBITDA margins compared to something like a Maruti. For this particular year, it was 12.7 versus 11.6% for Maruti.
FY23.
FY20. So this is for 9 months of FY24, and we've just kind of extrapolated it. But when we look at, the profitability Maruti is higher currently. So profitability for Maruti is, of course, when you look at just the percentage to revenue, it's at roughly 9% versus 8% of something like a Hyundai. And capex also is there. Another thing is one is royalty. Royalty for Hyundai is much lower at 1.6% versus 3%. But when you look at why is Maruti's profitability higher, is based on some ratios which we've done. So when you take a depreciation to the plant, the PPE basically, for Hyundai is higher at roughly 26% versus 17%.
What is PPE?
So when you look at, for any automaker, we look at property, plant and equipment, which is, their main capacity. Right. So that is much higher. So Hyundai is effectively depreciating higher, which might lead to lower profitability. We'll see how this goes. When you look at the other income, that is, of course, very higher for Maruti, and, how a big cash generator it is. And finally, on tax as well, Hyundai is currently, the tax to profitability ratio, PBT, is roughly at 26% versus something like a 22 for Maruti. So when you look at these three particular ratios, why Maruti's PAT is higher, we can get to know a little sense from that as well. And so is, effectively for this particular piece, when we look at the ROE picture as well, return on equity is surprisingly higher for Hyundai, roughly like 22%.
And so therefore the valuations?
So when you look at the valuations, as Tushar highlighted, we don't have the number of the total issue. But when you just extrapolate it on a price to sales multiple, which is for Maruti at 3 times currently, if you see the market cap revenue, as the screen shows, is that 3.8 currently, based on that assumption of $25 billion or 2 lakh crores. But when you take the same multiple and we extrapolate the current numbers, it comes to around the same for both, which is roughly 2 lakh crores. So the whole argument of 25 billion being a very expensive valuation, from the numbers that we've gathered, it doesn't look as expensive as it is. Plus, it could, be like we've seen Maruti globally of the parent is 50% higher valued in India. And in this particular valuation, we've seen that Hyundai is currently 50% cheaper to its global parent. So that's a very interesting take to see how this pans out
So
in the
therefore,
next few
perhaps
years.
some of that has gone into the numbers that are circulating right now. But as I see it, gentlemen, there are two cases, right? For years, we've been looking at Hyundai or Hyundai as the second largest automotive company in the car space in India, behind Maruti Suzuki, the gap being humongous. The question is, does it stay that way? You're saying that they will.
So, Alex, you have to look at it from 2 points of view. Now that the IPO papers have been filed and a listing is inevitable, so to speak, it will happen in the next 2 months. What Hyundai India now has to do is defend its number 2 position, because you have a Tata Motors snapping at its heels, coming from 5% 5 years ago market share at 14%. Last year, and Hyundai was at about 14.4%. So with the extra cash that is coming in from the
And
IPO,
now at 14.6.
No, so let's talk about what the year that's gone by,
Sure.
FY23,
Right.
because we don't have numbers for Hyundai as per its DRHP for FY24.
Okay.
So FY23, Hyundai India at 14.4%, Tata Motors were at 14%. So basically, they're equal share. So first, they have to fend off Tata Motors, defend its number 2 position that it has done in the last 10 years, 15 years, what has happened, and then step up exports. And that is where investors should look at. That's where the incremental growth will come in. That is what investors should look at.
But can it do that?
Given the pipeline that it has, for example, there's a Creta EV that's coming out by the end of FY25. There are 4 more electric vehicles that are planned that are going to come in. Yes, the competition is very strong. Tata Motors has a 75% market share, but it's a market share for it to lose, because Mahindra is also coming up with its electric vehicles. Hyundai also is coming up with the Creta, which is again the best-selling compact SUV in India. So there will be, like Tata Motors, it's a market share to lose. How do you consolidate it? It's Tata Motors' game, but to cut into it is much easier for Hyundai or Mahindra.
Last word, it's not going to be very easy. It could change very dramatically, quickly.
Yeah, I think it could change, but in a tough market of last year, when we've seen launches from Mahindra as well as launches from Tata, multiple launches, Hyundai has maintained market share. Now, as per the DRHP, yes, we don't have the FY24 numbers, but the sales number
Volumes
is out,
numbers, yeah.
which you mentioned correctly, at 14.6%. That's the same level which they maintained with last year. So I feel like in a difficult market where the launches for Hyundai hasn't been that many, plus, the compact SUV space that we spoke about, the 6 to 9 lakh range, they've had launches of Venue, Exter there. So in a tough market where they maintain market share and going forward, we will see more launches. It will be very interesting to see how the market share landscape changes, but the position that they're going into with FY25 is really strong, I feel.
All right. On that note, that brings us to the end of this particular edition of the Editor's Cut.